Just like Obi-Wan says, I don't click your mouse, you don't click my mouse. Right? Hey, let's have a talk about corporate accounts, shall we? Now, a couple things as we're on the chat tonight, and if you're watching this post, I understand it's a Thursday, you've got dinner, you've got all that sort of thing going on, there's work and things like that. We have lives, right? If you are in the Slack app, which you better be, go ahead and reply here. Now, I do have a new channel I created. I don't see it here. It's Trade Floor. It's just got the one thing in front of it, and it's a public channel. That's going to eventually transfer. This private one, I can't switch it from a private to a public. And I want to change these private channels into public channels so they're all public and you can come in and out of them as you need to. To do that, we have to transition. So you can go ahead and chime in the thread here on this Trade Floor channel. If you can get to the other one that's public, in fact, let me show that one to you. You go in here to channels, Trade Floor, you're going to see this one right here. See the hashtag, there's no private thing in front of it. You can go ahead and click on this and join that channel. This is where I would prefer if we could have the chat. I'll check both tonight, so I know this is all new. But the purpose tonight, the other purpose of showing you that is I want to get a screenshot from you on something you might be dealing with. If you have a trade that's out on your corporate account, and put it in context what we're going to talk about tonight. Okay, but put in context what we're going to talk about tonight. I want to discuss how to get these guys' money. And if you got open positions, let's see how you're leveraged. Let's see how you're positioned, and then maybe kick it up a notch. Let's get these guys' money so you can get your own money going, right? I know some of you are also in situations where you have been paying that indicator fee. It's some of you are in situations where you have that indicator fee paid because you prepaid it until a certain point in time, whether it's the end of this year or May of next year or whatever case it might be. Some of you are into spring, some of you are into summer of next year. So what we need to do tonight is talk about your strategy for getting these guys' money. Let's do it in the right context though. We talk about this whole concept of 5% monthly growth. Now, if you're just trading your own money, you're being a smart, wise investor. You're staying small, let the market do the work. You're being patient, and you've got a 5-year plan or a 10-year plan, whatever it is. You got longer eyesight than just right now in the moment. This is how we're kind of set up. We're looking to grab about 12 to 15 bucks a day out of the market if we can on a $5,000 account, so we can get to that spot where we're doing that 5%. Now, it seems to me that there's a kind of a shift in philosophy over there at the Empire, where they're looking for people to be aggressive. Why, I don't know, but they're putting out like these concepts of 1% daily growth, 1% growth on your account in a day, which I hope you understand. To accomplish 1% daily growth, you are taking incredible risk. You're jacking up your lot sizes because you're probably going for tighter pips on your take profits, which means your protection needs to be tight, which means you're opening yourself up to tons of market volatility. And it creates this gigantic stress nightmare. But that's what they're moving towards. That's what they believe that they can get people to do. They've been, in all honesty, since they started, they've been trying to get people to do that. And they've had giant attrition, people leaving, people blowing accounts, people end up quitting. And it's all because they're of that system of trying to do things. However, it is their money, and if they're going to give it to you, we have to kind of play by their rules. So in talking to some of you, I've kind of gathered that there's this movement towards getting more than just 5% monthly growth. In fact, that's not even part of their vocabulary. In their minds, I guess 5% monthly growth is offensive. They want to see more. To be honest with you, if you went to New York to a hedge fund manager or a mutual fund manager or someone on the New York Street, New York Stock Exchange, ask them what the returns are, they would kill you for 5% a month. 1% a month, they probably, first of all, they wouldn't believe you. But who knows what they would do if they could somehow find a way to get 1%. And those are professional traders. Those are traders that do this for a living. They've had years, sometimes decades of experience and training, and they're in there doing that war and that battle. And these guys expect you to show up with your brand new funded corporate account after having been taught by some 20-year-old kid with a 3-ring binder how to trade. They expect you to show up and do that 1% growth every day in your account. And they're just, it more and more feels like they're setting you up for failure. Okay, and that's one of the many reasons why I left and did my thing. However, let's put that aside for a second. We are trying to get their money. Is there a way to change our system to be a little more aggressive in a smart way so we can try to do that? So we don't have to pay these guys this indicator fee for the rest of our lives. At some point, we can do what we can to get what money we can get out of them and then cut ties. All right? Let's examine this for a second. Let's go back to this example here. Now remember what we did with this. We took a $5,000 account and we said, listen, if we want to do 5% monthly growth, we need to grab $250 out of the market. Now there's about 20 trading days. Sometimes there's more than that. I think on average there's 23 trading days in a month. Regardless, let's just say there's 20 to make the math easy. That would mean we need $12.50 a day in our trading to get that $250 to get our 5%. Okay. Now, if we're going for 30 pips a day, which is pretty typical on these ATRs and these daily pivot scalps that we're going for, and if you fold into that the swing trade you might do every once in a while on the pair you're trading, for crying out loud, that one might be a 60, 70, 80, 100 pip trade. Even if you do only go for 15 pips every once in a while, on average, if you took the aggregate of all your trades that you take, you're probably trying to get about, on average, 30 pips, which is perfect. If you do a lot size of 0.04, if you did 0.04, that's only going to give you $12 a day, so that's not enough. That's 40 cents times 30 pips, that'd be $12. Not quite enough. I can't do 0.04 something else because you can't trade that way. So I have to go up to the next lot, which is 0.05. If I did 0.05 times 30, that gives me $15 a day. So that actually creeps up. That's more than just 5%. Okay. Now this is just assuming that we're taking one trade a day. According to Market Managed, on a $5,000 account, we could have a max lot of 0.40, $4 of outstanding position in the market. If you divide that up by 8, that gives you that 0.05. So you could have 8 open positions in the same direction or in different pairs or something like that and be at your maximum. So there is room here to maybe push and go a little bit past 5%. Well, what does that look like? Let's build this together. I create this right here. What if we kept that 30 pips a day, because I don't think we can get past that. I don't want to be asking any more from the market than we need to. 30 pips, I think that's fine. And then let's talk about our max lot size. I think that doesn't change either. Our max lot size, we've got to stay above this 2,000% margin. That's our goal and objective. If we can stay above 2,000%, we guard ourselves from any kind of flash, well, most any kind of flash that could take place. So we still need to be at this 0.40 on this particular account, right? And we still could have 8 open positions. How they're allocated, however, could change, right? And we could also say, why don't we, there's a couple of roads to go here. What if you get really good at the trade that you're taking, the daily trade? You feel like, you know what, I got a good groove. I've been able to filter some trades out that I shouldn't take. I feel like it's working well. And I want to take on a little more risk. Well, then you could do this. Don't ask me what this is. This is going to be what? 6 into 40? Who's got their calculator out? Isn't that like a 0.06? 60 cents a pip? Which is only 36. So it's still below your 0.4. But you could, I don't know why that's not lined up, but you could do something like this. Each of your trades is a 0.06. So you're increasing your lot size a little bit because you have a level of proficiency with your strategy that you're using. There's another way we could do this, just to push, the boundaries a little bit and see if we can get closer to this, maybe 10 to 20% monthly growth. Ask a little bit more. Let's go to a 2-pair system. Actually, let's go first to a 1-pair system. Let's say we have a 3,000. Hope I tried to do this math quickly. Hopefully it's correct. If I have a $3,000 account, which is what most of you start out with, some of you might have some re-ups, maybe some quarterly increases that you've got. So you might have 5 or 6 or 7 or something like that, or maybe even more. That's great. Here's your balance. We're just going to trade the 1 pair. Now, because we're trading the 1 pair, we can probably, get a little more beefy on our lot size. Now, remember, some of you I've taught before, when you're doing a corporate account, your margin multiplier, I told you, should be 0.0004. We're going to push that to the side. And with all of you that have corporate accounts in our group, I'm going to suggest to you that it's time for us to take the training wheels off. Let's go ahead and let's see if we can't do that 0.00008. And let's use that. I know we have a 50% drawdown rule, but look, if they need us to be more aggressive to get their money, let's go get more aggressive. Look, what's the worst thing that can happen? We get a little more aggressive. It's not successful. We blow the account. We cut our ties. We feel like we're probably going to leave these guys behind anyway. So at least we've got in there. We gave it a shot, a good, smart, conservative shot. It didn't work out. That's the worst thing that could happen. I don't think that's going to be the case. If you do that 0.0008 or the 8 multiplier and you have a 0.24 as your max lot, you're still going to be above 2,000% margin. The drawdown, you might want to keep a little bit bigger of an eye on, but still, I think we can go here and still be safe. Just keep an eye on your margin levels. Keep an eye on your equity drawdown. If you start drawing your equity down, to let's say 70% or so, you need to direct message me. If you have, for instance, this $3,000 account, that means you have $1,500 that you're trading with. Well, if you whittle away half of that, if you whittle away $750 in your trading, you and I need to have a talk. We need to discuss what you're doing and make sure that you're trading properly. You need to make any adjustments that we might have to. Maybe we do some special recovery to try to get you out of a situation that you might be in. Okay, so a 0.24. By the way, are we up and running? Can someone chime in and let me know that you can see the screen and hear the voice? I know I've got viewers on here, but no one's talking yet. Just somebody chime in into one of the chat rooms there. If you could do it, please also, if you could do it in this trade floor with the private little thing on it, get in here in the reply section and give me a reply here. Okay. Anyway, what I'm trying to say is here, we're going to be more aggressive. So we've got a 0.4 as our max. 0.24 as our max. If we're going to have 6 open positions, that means we can do a 0.04 as our lot size. Now, what have I taught you guys? When you first start trading, 0.01, the lowest you can do, so you can make your mistakes and learn your lessons while they're free and while they're cheap. Right? Hopefully, once you get past that first month, that rule I think should still be in place. Do a 0.01 on everything that you're doing until you get past that first month of live trading. Once you get past that first month of live trading, let's start being more aggressive. You could do a 0.04 with a 1-pair system. Notice what we've got here. Down here, we've got our strategy for scalping, which could very well be a daily pivot trade at market managed. In addition to that, when we have an outlier trade, we're going to use a swing averaging system on top of that. Now, we need to allocate lots. We need to allocate units to this. Maybe we give 4. I have 6 units here. 6 open positions, 6 total units I have available. Maybe we apply 4 of these to our scalping strategy, and 2 of these we budget for our swing. So they're just kind of in reserve. Remember, all we need is 1. Think of it this way. If you're doing 60 cents a pip times 30 pips, let's redo the math here, shall we? Let's escape out of this. We can figure out our growth. This probably isn't 20%, but let's figure out what it is. If we just have one of these bigger size, lot size trades, and it fills every day like we want it to, hypothetically, Well, what would that be? 30 times 60 cents is what? Per day. I'll get my Bill Gates calculator out and we'll figure it. I'm waiting for some participation. I know you guys are out there. I see the viewers on YouTube, so I know you guys are there. Maybe you're only half listening. 0.6 times 30 pips a day is 18 bucks, right? Come on, Billy. There you go. Billy Gates, let me do it. Thank you, Squatch. Squatch says 18 bucks. Now there's 20 trading days in a month. So how much money is that? 20 times 18? It's only 360. Right? So what percentage of that? What percentage is that? It's not 20%. It's definitely not 20%. Yeah, it's 7.2. So it's creeping up. Alien Pip Farms making dinner. Gotcha. So it sounds to me like we either need to take a second trade or, do a second pair or raise our lot size up if we want to get closer to this 10 to 20% monthly growth. We made a slight progress towards it. Now, what if we did this two-pair system to where we don't just have one pair in play, but we have two pairs in play? We allocate maybe, 2 or 3 of these trades to this one, and then 2 of these trades to this one, and then we keep a reserve swing averaging unit available for us on the side if we need to swing average out of a trade that's open. So we have 2 of these running at the same time. Hypothetically, what would that generate for us? Well, instead of getting 30 pips a day, we'd be getting 60 pips a day, right? Because we have 2 different pairs that are running. So this all changes. 60 cents times 60 pips is what? 36 bucks. Everything doubles. 36 bucks a day, which this would double to 720. And what's 720 divided by 5,000? 14%. So we're creeping up even further. I would be shocked if they're not giving you your full re-up plus some if you're somehow coming down with 14% a month. Now, I know this is a little more aggressive than I'd like you to be, even normally. But again, the purpose of this particular account is different. We don't mind being a little more aggressive here because we're trying to, the purpose of this is to use their money to get our own. So something like this could potentially work. Just you've got to be careful, people. If you still feel like you're not totally comfortable with the strategy that you do every day, don't start raising your lot sizes. Don't start doing stuff like this yet. Wait until you feel like you got a little bit of a groove, you got a little bit of comfortableness with what you're doing before you start raising these lot sizes up or increasing your pairs. And by the way, you have 2 options here. You could do a 2-pair system where you split all this up into 2 and allot it and budget it into 2 different pairs. Or you could just raise your lot size on this pair, right? What if you have a $5,000 account up here? All these numbers well, what if you just have a $3,000 account? And instead of having 6 open positions, you just want 4. Well, then you can go over here and do this, 0.06. And maybe 3 of your units are allocated to your daily pivot trade, and 1 of your units is allocated to your swing averaging. You can start making adjustments once you get comfortable with what you're doing. I wonder what this would look like. Let's change this up here. A $3,000 account, so this is the same lot size we were using on another deal over here. What if we switch this up to $3,000? By the way, all this would stay the same. This would be 30 pips. This would be a 0.06 though. This would have to change. Our max lot, because it's 3,000 times 0.0008 would be a 0.24. We're going to allow ourselves 4 open positions, right? 4 open positions into our max lot of 0.24 gives us a lot size of 0.06 per trade, which means every day we're making how much on our trades? 30 times 0.6, go back to that $18 deal, which means this gets cut in half too, back to that 360. So what is that? What's 360 divided by 3,000? Yeah, we're at 12%. Alien Pip Farm says, listen, I'm trading low while I'm still gaining traction on my system. Perfect. There's no need to hit the throttle. Once you feel like you've got a good handle on this, then you can open up the throttle. I'm just hearing from different people, the culture over there is changing and shifting. They're doing this whole strategy of 1.5 pip trades. Have you guys seen this? How many of you have seen that? Where they have these 1.5 pip trades with, I guess, a 12 pip stop loss. You don't just do one of them. For some reason, you do 5 of them. So I guess you can pay, the commission on each. I don't know what you're doing. Regardless, you take 5 of them, and they're just micro scalps. But that's even that right there. That's 5. Was it maybe 8 pips that you're looking at? 7 or 8 pips total. If you're only making 7 or 8 pips a day, but if you're making 7 or 8 pips a day, you know how high you got to raise your lot size to get 1% growth? Even if you're doing, let's talk about that. What if I wanted 1% a day? Let's examine how much risk we've got to take. See, Alien Pip Farm says he's tried it and it doesn't work for him. Well, it doesn't work for a lot of people. And once they have enough attrition, I think they're going to have to re-examine what they're doing. Yeah, too much trading. You're in the market too much, which opens you up to too much, making too many mistakes, too much market volatility, all that stuff. What if we wanted to get 20% growth? What's 20% growth on $3,000? That's $600. Let's reverse engineer this. How much money if we have 20 trading days in the month? That can't be right. Hold on. What's 20% of 3,000? Yeah, it's 600. I went to math class. Okay, so what per day do you need if you have 20 divided into 60? Isn't that $30 a day? So you got to grab $30 a day. If you're doing 30 pips, that means you have to trade at $1 a pip. Which means if you only have 0.24 max lot size, you're now going past. You're going to have to go past your max lot. You're going to have to go past your threshold. You're just going to have to break it, or do something like this where you can only have 2 open positions, because then you can accommodate this $1 a pip. Then you can get to this 20%. The difficulty is, what do you open yourself up to? How much of a quick drawdown do you open yourself up to when you take on this kind of risk? I've shown you this before. Let me see if I can bring it up quickly enough. Because what are they doing? They're doing the exact opposite of what we've discussed and what we've taught. And that is this. Where'd it go? I'm not seeing anyone post up any trades they're in or any situations they might have yet. I'll keep an eye out for it. So it sounds to me like they're looking to raise their lot size, which is a higher lot size here, $10 per pip. Go for a smaller pip amount to get their return, in this case $30. Where what we're doing is we're lowering our lot size, we're increasing the amount of pips we're going for, so we're going for a longer trade, and we're getting the same return per trade. It might take a little longer, and I'm really, if all I'm asking from you guys is 5 to 10% monthly growth, it's conservative, it's stress-free, the market's doing the work. If you're trying to do this thing up here, you are the one doing the work. You're the one that has to find your signals. You're the one that has to find your entry. And if it goes against you, you got to find 2 more to make up for it, or 5 more to make up for it. This is laid back. Don't use a stop loss. Let the market breathe. Let the market bounce around. Chill out. Invest. Same result for 1/10 of the risk. right? Somewhere in between those two might be where you have to be to make this corporate account work. Let me say that again. Somewhere in between, I don't want to call these extremes. I'd call these just two different sides of the pendulum that we're swinging on here. One side says, I'm going to raise my lot size, go for smaller pips, try to be in and out, look for signals. By the way, this is very signal based. This one up here, you have to have lines crossing lines, and you got to be watching different charts. I mean, you can't be messing around with your entry here. This guy here, $1 per pip, 30 pips, going for $30, whatever. Just the opposite. It's more of investor style. We're not worried about the exact entry. We're more worried about our money management. Somewhere in between these two might be where you have to be to make this corporate account work. Because again, the purpose of this trading is different. You might want to be a little more aggressive to get their money and then get out. I know, Pitt. Pitt's making the painful assertion. Remember, it isn't their money because it comes from the $15,000 you paid for coaching. Yeah, I get that part. However, when they have this new, you guys heard this new silver or platinum program, whatever it is they have? You guys seen this thing? I talked to someone yesterday that gave me the numbers. If you give them another $6,000, and that's what they had to do in their case, give them another $6,000. What they'll do is they'll re-up you every month. And according to what I heard, and I said I'd love to see this in writing somewhere, they will double your account every month. Tagged onto that was, yeah, but they need to see like 1% daily growth. Insane. They're asking you to trade like a professional trader, and not even like a professional trader, just some freak of nature trader doing at your level. You guys don't understand. There's so much you haven't experienced. There's so much you haven't seen. And you are also going into unknown territory. Look, I've been doing this for a long time. I've never traded in the middle of a Brexit vote like this, where Britain's looking to leave the EU. I've never traded it where a whole country is leaving another system of countries. I've never traded in an environment like that before. I don't know what to expect. And they're giving you the keys to a Ferrari, and you've got no driving experience. It's like giving my 16-year-old the keys to a Ferrari and say, here you go, buddy. Oh, and I'm not insured either. Have at it, though. Gas tank's full. Make sure you drive that canyon road too. You know, that really tight one without you can't see the lines? Get on that thing, will you? Anyway. Look, you guys, the clock is ticking for you guys. And you know it. You've got a date in mind where it's like, okay, this is my end game. On this date here, I'm probably done with these people. Fine. So between now and then, let's start building a strategy or a system for yourself that might be a little more aggressive. Let's get into one of these. If you have a one pair system, that's fine. Let's examine your lot sizes. Maybe take a little more risk on those just to start to build up some more equity. Okay, maybe a two pair system. Do something like this. I like the two pair system because it kind of diversifies you. If one of these pairs is not doing very well, the other one might pick up the slack. One thing I would advise against though is try to avoid the pound pairs if you're trying to trade corporate for now. If you're doing personal investing, I don't think the pound's I don't think anything's out of the question. But the thing of it is, some of these pounds might be open for a bit because of the moves on the pound are not technical based right now. They're really driven by fundamentals and driven by news events. It's really hard to trade in that environment. So anyway, consider any two combination of pairs and be a little more aggressive. Jason, will you ever be able to provide funding for some traders? I don't know. That purpose of my business model is for people to fund their own. I have no intention of that. I'll keep my price low so that people can fund their own accounts with their own money. Look, if I have a training program that lasts an entire year for someone, it costs $775. Um, they should have money on their own to put into an account to trade with. That would be my intention, with no drawdown rules, no no hovering over anyone's shoulder. It's all yours. I like that business model. It's either that or they could try to go to someone else and give them, six, seven, 10, 20, $30,000 and get a trading account that's really not funded by the company. They fund it through their own through paying it. If you look at like Maverick or some of these others, if you look at the fine print and they say, "Oh yeah, we'll give you an account to trade." Well, if you look at the parameters and the restrictions and the drawdown restrictions and all that stuff, you're not really trading their money. No business is going to set you up and give you 50 unless you're working for like Merrill Lynch or Goldman Sachs or something like that. But then you're going through an extensive training program, and a lot of times you're working for free until you get to a certain training level. So no, it doesn't fit my business model. I also, part of my business model is, let's give you guys this 5-year perspective so that you have your eye on the prize. What am I building? What am I creating and growing here? Right? And so that's part of my business model as well. Would you look at the Euro Aussie, a year and two of them long? I think I wanted to go short on Euro Aussie tonight. I think I put that up on Slack. And it's already working out for me. It's already going down. The reason I wanted to go short, first of all, I'm starting to see short-term momentum, but I felt like long-term, I have some weakness. Oh, this is Euro New Zealand. Same thing. I have some strength building in Aussie and in New Zealand. And just personally, I felt like, see here, my weekly, I'm kind of overextended a little bit or getting there. I've had a couple of weeks of upward momentum, upward movement, and I feel like it's due to come back down and retest. And I think along the lines of that is I feel like I have no reason to buy the euro. And for some of you who are long in the euro, I think you're okay, you're fine. Just when you get back to being bearish on euro, get bearish heavy, be a little more aggressive to the sell side, hedge a little heavy to the sell side on these euro crosses, euro USD, right? Right now we're bullish on euro USD, so you're fine there if you're in some kind of bull position. Something like euro Aussie, where I got a little bit of strength in Aussie going on right now, I feel like we could come back and retrace some of this move that we've had, get back around. I think I marked 161 as a target. 162 is a very conservative target. What's your daily pivot trade today? Look at a 120. I think your daily pivot trade is short. So if you're in 2 long trades, depends on how much money you have in your account, what your system allows, but you need to get leverage to the short side. Come on, man, load up. Yeah, I got a daily short. So you need to get leverage to the short side. Your next target is 62.36. So here's one thing you could do. Do one trade that's going to equal those 2 longs. So you do a short trade right here that's going to equal the lot size in those 2 long trades. I feel like you could be coming down even into here or even into here. So put a take profit on this trade. So if you've got 2 longs in, let's assume that they're $1 a piece. So this would have to be a $2 trade right here. $2 short trade going either to, probably 162 or even down here to 161 with a trailing stop attached to it. I'd say as soon as you make the ATR off the 240, which is probably like 30 something pips. Let's look at that really quick. As soon as you make the ATR off the 240, why is it taking so long to load? Come on, Billy. I emailed Billy Gates directly. I said I need faster internet. My son's going to update the RAM on my computer. He says my RAM is too small. I got an 8. He's gonna upgrade me to a 32, and he'll say it'll be a big difference, whatever that means. He knows better than I do. Wow, come on. I just want to know the ATR on the 240, Billy. That's all I'm after. What I'm trying to say is your trailing stop would equal the ATR off the 240 chart or a little bit better. I think you're in the 30s, like a 31 or 32. Ah, you're at 34. So give me, I think that's what I've got on mine. Is like actually, I think I'm on mine. I think I'm going down. I posted the trade up. What do I have? I'm going to 162, and I don't know the trailing stop I have on it. But I would put at least, I'll put a 40 pipper on it. See, I don't have a trailing stop on this one. No, I do. And by the way, this stop loss, 3,000 pips away. It's just there so I can see this is in yellow and that I have a trailing stop attached to it. That's the only purpose I have a stop loss in there. Anyway, now, so what I'm saying is you have 2 buy trades, right? You have 2 buy, I don't know where they are. Let's assume they're over here. I have 2 buy trades. Now this sell trade needs to equal the lot size of these 2. And it's going to go. It's going to go to probably a longer target, and I'll trail stop it at a certain point. I am also wanting to make a little money on my equity while this is open, and I've got room to do it. If I have 2 here and 2 here, if you added that together, I'm at 0. So I'm flat. I have room for another sell trade. This sell trade, I gotta make sure this looks right, would go to like my S1 and take profit. So I gotta fix this. This first trade here is gonna go to a bigger target. This other trade here would, once we hit the S1, closes out at profit. So we make a little equity back. You've got room to do it. Right? Now, I don't know what's going to happen. You got to be a chess player. What if this starts to go up? Well, if it starts to go up, we'll just re-examine it tomorrow and see if we got to reposition ourselves to the buy side. We'll figure out what to do. But my deal is I feel like I'm overextended on the weekly. So let's do a 1W. Until my weekly, until this guy starts to come back down and get oversold, I don't mind being in sell trades. Once I get here, though, and start to show that I'm bottoming out, starting to want to come up, if I have some sell position open and it's profitable, or even some sell position open period, I'm probably going to close out a sell position and get ready to get leverage to the buy side again. This is just constant re-leveraging. As it's coming down, I'm leveraged to the sell side. As it bottoms out, starts to curve, I offload my sell position and get ready to go to the buy side. When my buy side tops out, I offload my buy position and get ready to go to the short side. This is a weekly cycle that's following up and down and up and down. I'm just trying to stay in its flow. What's 31? What does that represent? Sorry, Katie. I don't know what that means. Is it how old you think I am? You're close. Late 20s. Late 20s is the correct answer. Cool. What else is out there? Pass these pounds by. Something like right now that's Aussie yen is kind of strong on strong crime a little bit. Yens are super strong right now, guys. Yens are super strong. If you're looking for a good yen trade, find something that's weak. What's weak right now? If you want to do an extra trade, CAD is weak. So doing like a CAD yen trade short, look for your pullback, but not too bad of a pull. Boy, look at that murderous thing that happened here. Question here is, do you pay close attention to your LTM when playing bigger cycles like 480 and above? LTM. It's either really late or I'm not familiar with your acronym. Or my brain's not working. LTM. Long-term momentum? I mean, this thing? Sure. It's a consideration, but if your long-term price momentum, let's go back to this guy over here. Eurowazi. See, I'm feeling like this is going to want to go short on my weekly chart for maybe, it could be a couple of weeks, a week and a half, 2 weeks, something like that, right? This could come down. My long-term price momentum could totally stay up here, though. This could still long-term. This is a weekly chart. We're looking back in June on this thing. Long-term price momentum could still be up here and still be bullish, even though the cycle is coming down. But because this is a bigger chart, like a weekly or a daily or something like that, there's enough room in that cycle to give me a movement that's going to help me get out of something. So I'll still use it. Euro yen. Oh, ATR is 31. Okay. Yeah, it's just something above 30. Euro yen's all bearish. And see, I had this drawn out over here. I was thinking come up, come down to here, could even come down to here. I'm still bearish on this. I have no reason not to be. I've got this longer term short stuff that happened early September. I don't know why we couldn't find ourselves down there. If you're in a short position right now, you're just staying in it, just riding it. You got another daily pivot trade you're supposed to take short today. You got to keep taking it. That's it. Once you start to break your trend line, right? Once you start to get these higher highs and higher lows and start to do something like this, then we can talk about, because I can probably tell you your situation. You probably sold something over here, right? Or somewhere. And you're in it. And it's coming back towards it. Well, if we make this move over here and start to go bullish, you get to make, like you talked about last night, an adjustment. And that adjustment could be stopping this trade out and just getting it off your books. Or you could keep the trade and just get into another hedge situation. But this hedge is going to run. If you hedge again over here on this trade, this is going to run up, and if I came down like this, I'm probably looking at 50% retracement up here around 119. So I'm probably running this trade up towards 119. That might take a week and a half or so. This one's going to be a runner. It's going to protect my equity against this sell trade being negative until I get up here, where I'll release this buy trade. And then let's see what the market wants to do again when it comes back going short. That's one way to handle it. The other way to handle it is to, if this starts getting bullish again, just get this thing off your books. You've come back towards it plenty, so you could also just get it off. Look, this could be bullish for 2 weeks. Do you really want to be in this sell trade for another 2 weeks? I mean, if you're fine with that, then maybe you're fine. I don't think we're done, though. I'm looking at this. I don't think we're done coming down. I have no faith in the euro right now at all. And I know I've got yen strength because I got risk off. I've got risk off in my global economy, which means yen strength. So I don't mind kind of taking a flyer on this thing going short. If you're leveraged to the short side on this, you're golden. Okay? Cool, guys. Good meeting. Keep coming to the advanced sessions. We're going to continue doing trade recovery every week. If you've got certain subjects you would like me to address, either direct message me or put them in this thread or any the thread that or the advanced trading or something like that. Get it to me so I can make that a part. On the basic trading next week, I've had some requests for Heikin-Ashi and Fibonacci discussion. So we're going to do that in basic. Next week in advanced, we're going to continue our discussion from the symposium. And we'll move on to our next subject. We'll continue with this averaging theme that we've been talking about, though. We'll continue that. I'll even have some live trading examples going by then that we can examine together. But I can't help you guys if you don't chat with me, if you don't tell me what you need. So communication, please. All right? You guys are awesome. We'll talk to you soon. Bye.